Hi everybody, it's Marcus Collins from MA Properties for another market update for Lexington. So here we are in November 2021. We've got a lot of information in for the year. So now it's time to kind of delve a little bit about what's happened in throughout 2021. And also, of course, now as we're kind of coming towards the end of the year, look at our predictions for 2022. So let's get started. Relatively easy to get information today, and much more difficult to get kind of insight in terms of what's happening. And that's really what we're about. And that's why we look very closely at what's happening in the market. As you'll see in a moment, there's lots and lots of information in there, but also that analysis piece that kind of pulls the whole thing together into a story, if you will, in terms of what is happening in the market, not just one or two data points. So a lot of information you've got to see this evening. But there's a lot more information out there. So if you're not necessarily interested in other towns, then please go to our website, because we have lots and lots of statistical information for a large number of towns. There's over 50 towns in our database right now. Lots of different metrics. Almost every town inside 495. So you will find, if you're interested in what's happening, not just in Lexington, but go a little bit further out. Perhaps you're interested in going further out and looking at Acton or Concord or Carlisle, whatever, all those towns. They're all in there. So there's lots and lots of information. And what you'll see this evening is also available on our website, I say for a relatively large number of towns. That's kind of broad, but there's also, you may have seen this if you lived in Lexington in January this year, or perhaps you've met us over the course of the last 6-9 months. You may also have seen a copy of our market review. We do this every year. We're kind of gearing up for the 2021-22 market review, but it's out there and it gives an interesting perspective specifically about what happened in the Lexington market throughout the COVID years. So for a little bit of a historical perspective, take a look at the market review. There are lots of information within that. So what are we going to talk about right now? So going to look at the single family home market. No surprise there. Take a look at the luxury markets, because there's something interesting going on there, and that's really is worth highlighting. So we're going to look at the luxury market and then look at the condominium market. For those of you who've watched these for a while, we started looking at the condo market in early 2021. We hadn't really focused on it previously to that, but there is some interesting data that stay tuned for that. If you live in a condominium in Lexington, stay tuned, because there's some interesting information in terms of what's happening in the condo market. After that, we'll take a look at what's going on in the kind of wider perspective, but also our predictions for 2022. So let's get started with single family homes, shall we? First graph I always show is the inventory levels. What this is a snapshot of how many homes are available on the first of the month. Been doing this for a long time, so what's interesting is not necessarily that actual number, but how it relates to the information that's gone on previously. So what's the trend, if you like? So, and I can highlight here a couple of interesting trends that we've seen over the last decade. This is 10 years worth of data. Here's the first one. This high levels of inventory was the tail end of the recession. 2008, 9, 10 carried on, still in effect in 2012, and then it was only in 2013 that buyer confidence returned to the market, and so that inventory level dropped back down again. That's not a consequence of fewer homes coming on the market. It's a consequence of more buyers being more confident in terms of coming into the market and buying those homes. Those low inventory levels continued. They rose a little bit in 2019. If you remember, there was discussion around a correction. We weren't really sure what was going on. Were we going to see a housing correction? Were we going to drip into a recession, and so on? That was kind of 2019. That went out of the window, of course, when COVID kicked in 2020, which you can see here. Low levels of inventory in 2020 as more buyers came into the market. I'll show you more details on that in a minute. But look at 2021. This really has been a very interesting year in terms of what's going on with the data. Very low inventory levels, as you can see that here. Even comparison to what we've seen in 2020, it's a low inventory level. So, low inventory level, are we talking no sellers in the market? Are we talking more buyers? Why are we seeing that? So let's first of all look at the number of home sales. What you see here, blue is existing homes, green is new construction, and then that orange color are the off-market teardowns, those homes that don't actually come on the market. They are sold privately to developers who then convert them into new construction. So I have that in that kind of orange line. And then the red is the projection to year end 2021. So we're projecting another 70 home sales between now and the end of the year. And you can see the levels of home sales been declining since 2015 as more home sellers decided to stay where they were, take advantage of house price appreciation and so on. So the number of home sales, the number of home listings as well, declined, but rose sharply in 2020, and that is going to continue, or is continuing, into 2021. So that low inventory level is really not a consequence of no sellers in the market. Guess what? It's a consequences of a lot more buyers in the market consuming all of those homes that come on the market. And that's why we have very, very low inventory levels. Lots of sellers, lots of listings, but also lots of buyers. Now, when you have lots of buyers competing for homes, guess what? They sell quickly. Here we can see our days on the market, lowest that we've seen historically, and down about 28 days. For comparison, we would be around 40 normally. For comparison, if you look at Arlington, quite interesting, a stronger market than we see here in Lexington, a little bit closer in, more affordable homes. Their numbers around 15. So a low number can get lower. That's not as low as it can get, but because of the mechanics of Lexington and the wider range of home sale prices, 28 is still a very low number. So strong, indicative really of strong buyer demand. The other one, which is very indicative of buyer demand, is the ratio of sale price to list price. So imagine a home comes on the market at 800,000, sells for 800,000. That's a 100% sell price to list price. Now, historically, we've been around about 100%. Sometimes 1 or 2 points lower, sometimes a point or two higher. But look at what happened in 2021. Here we are the average is at 106%. What's interesting is that there are still a large number of homes that sell below asking. But if you get everything right, you get the marketing right, you get the home prepared correctly, you create what today's buyers are looking for, it is possible to get substantially over the list price. And this is very, very indicative of a strong buyer's market where you've got multiple buyers competing for that home. Even in comparison to 2020, which at the time we were surprised it was as high as it was, if we kind of look at this kind of last 12 months or so, the blue lines are the number of homes that sold. Don't worry about that for the moment. What you're interested in is that orange line, and you can see it here. Bouncing around 100%, this is 100% here, bouncing around 100% throughout the end of 2020 into 2021. But as soon as the spring market kicked in, so that ratio rose upwards in some months, for example, in September. And that's actually a home that sold, went under agreement 6 to 8 weeks prior to that. So in that kind of June, July timeframe, that ratio was upwards of 110%. So very, very strong buyer's market. Buyers willing to push those home prices much higher than their list price, if you get everything right. No surprise then, house prices have risen. This is the average sale price in Lexington. We're at 1.67 for the average. That's clearly a substantial increase over what we saw in 2020 and historically for that matter. Also the median's higher, not quite as high. It's always because of the distribution of home sales. Median's always lower than the average in Lexington. But you can see even the median is 1.54 million. So over that 1.5 million mark, that's again a substantial increase over what we saw in 2020. So interesting to look at cumulative sales. We kind of started plotting this in 2020, trying to see what the impact of COVID was going to be and when we would potentially pull out of COVID. But we now look at it year on year, even without COVID. So here is the cumulative comparison between 2020 and 2019. 2019 is the blue, for example, or in this example. So what you see here, that flattening of that pink curve, which is the 2020 cumulative sales, that's the impact of COVID. As we got into that kind of March timeframe, so the number of listings coming on declined, therefore the number of sales declined, and the number of buyers in the market declined. But once we got into the early May timeframe, confidence returned into the housing market, and lo and behold, look what happened. We saw substantially more home sales, really, almost like the firing gun started in May, carried on, and we got substantially more home sales in 2020 versus 2019. If we plot 2021 versus 2020, ignoring the kind of flattening of that curve, as you can see, as the year has progressed, so we're tracking about the same number between 2020 and 2021. So about the same number of home sales, and that's why our projection is that we'll see a few more home sales in 2021, but substantially the same as we've saw in 2020, but at a much higher price, and that's kind of key. Let me turn my attention now to the luxury market, because that's an interesting market to look at. We've seen some substantial changes in the luxury market. First off, the home sales, same idea as the graph you saw previously. Green is new construction, blue is existing homes, and then that red is the full year projection for 2021. As you can see, luxury homes, and I should say that we define luxury as home sales over $2 million. It's kind of arbitrary number, but that's what we've been plotting for a number of years now. And as you can see, that number has risen steadily, much higher than you would expect based on ordinary price appreciation. Price appreciation clearly will push some homes over that 1.9 into the 2 million. So you would expect an increase in the number of over 2 million sales, but nowhere near the number that we've seen here that can be attributed to ordinary price appreciation, and say substantially higher this year than last, which was again substantially higher than the year before. Looking a little bit into the details there, though, the distribution of homes, what I've done here is plotted the distribution for 2 to 2.5, 2.5 to 3, and over 3 for 2018, 19, 20, and 21 year to date. And what's interesting, no surprise there's been a kind of gradual increase in terms of the higher priced homes. But what is very interesting this year, I feel, is that the number of homes that are selling over $3 million. 2 in 2018, 4 in 2019, 7 in 2021, 17 this year. That's a substantial increase over what we've seen historically. And when you think about Lexington and its super high prices, if you like, in terms of that over 3 million, the super high priced homes, when buyers were looking for over $3 million homes, they were looking in Wellesley and Weston, Brookline, Newton. They weren't necessarily looking in Lexington. It really wasn't in their list of towns to look in. But what we've seen here in 2021 is now Lexington can be very much added to that list. So as buyers are looking at over $3 million, there are a lot of homes for sale over $3 million. There are a lot of home sales over $3 million. So we're seeing Lexington coming into that. Yes, it can support over $3 million houses. So that's interesting. So expect that number to stay at that number, if not increase as we move forward. So I thought that was interesting to see. Certainly those over 3 million sales, that's kind of an area that we haven't necessarily been able to support in the town. Turn our attention a little bit to condominiums here. There are a fair number in Lexington. Condominium sales, again, same as before. As you can see, more condominium sales in 2021 versus 2020. But here's the interesting thing. Here, new construction, I should perhaps explain. Condominium sales are really divided into two. New construction sales versus existing. And by existing, I mean Potter Pond, Pfeiffer Lane, Drummer Boy, and those kind of existing condominium developments. As you can see in 2020, we had a large number of new construction condominiums come on the market. Those are the ones up on Grove Street, almost on the Bedford border. So that was where that 22 came from. Very few so far this year. We will see more with the development coming on Emerson Gardens Road, but they're not quite coming on the market yet. Certainly here we are in November, they're not sold yet. I should take it back. They've been on the market, but they're not sold yet. So the number of existing condominium sales has jumped really from 42, and it's been that number, for the last, certainly since 2018, it's jumped from 42 to 55. So we're seeing more condominium sales, and that's 55 year to date, more condominium sales this year of existing condominiums than we've seen historically. If we look at average prices, a little bit lower than we've seen historically, but of course, now we've got to factor in existing condominiums, which in general are a lower price than the new construction condominiums. So we take this information and we back out the new construction. It's a much more interesting picture for those who live in existing condominiums. You can see, having declined since that 2018 through 2020 timeframe, that timeframe we saw a decline in condo prices, predominantly because the condominium fees for a condominium development in Lexington are higher than they would be, for example, in Arlington. Arlington dominated by 2 and 3 family homes, lower condominium fees, but about the same average price. The condominium fees in Potter Pond, Pfeiffer Lane, and so on, much higher, about double what you would expect to pay in a condominium in a 2-family in, for example, Arlington or Somerville. So that put a damper on house price appreciation in the existing condo market. Now, consistent with the market in general, we've seen a very strong market. You can see we've seen a substantial increase. We've almost made up, I think it's fair to say, all of that decline in that 19 and 20, we made that up in 2021. Time will tell if that continues moving forward, but certainly the strong demand we've seen in the town has meant that existing condominium prices have been pushed higher, making up, certainly reversing the trend that we've seen previously. So that's the condominium market, new construction, and specifically what's going on with the existing condos. So what's happening to drive the market to the level that we see it at today? So a couple of things, but predominantly one thing in terms of Lexington, and that's really changing housing demands. Now, there's some profit taking as house prices get higher, so more sellers come into the market. Economics 101 playing out, of course, no surprise there. But we're also seeing buyers' demands for houses changing, and by buyers are clearly originally normally the sellers as well. But so as buyers and sellers' demands on what the home they live in changing, or homeowners' demands on the home they live in changing, perhaps they're looking for more space. They used to have one office, maybe no offices. Now they need another office, maybe 2 offices. Maybe they want a little bit more space. They're not as comfortable. They're spending more time at home, and therefore I want that larger yard and so on. They want to live closer to family and friends. They want different amenities. I just mentioned that. So there's a lot happening in terms of what today's housing, what today's homeowners want from their existing or their new homes. And that's a big driver of what's pushing the market today. And that's new. That's driven predominantly by COVID. So 2 years ago, this really wasn't the case. There was the normal progression of people wanted a little bit more space because they need more bedrooms, or less space as they come to downsize and so on. This changing in terms of those housing demands is what's driving a lot of the market today. One other change, of course, or one other effect here is demographics. And I've shown this graph before. This is actually the new data. This is census from 2020 census, so it's up to date. Previously, you would have seen the graph that was for 2015. What I'm plotting here is the number of people within each age bracket. There's 2 areas which are important. I'll highlight those in yellow here. The top bracket, is the baby boomers. That was the children born after World War II. Those homeowners looking to think about retirement and therefore downsizing. So big group of homeowners, sellers thinking of downsizing. The lower group are the first-time home buyers, the millennials. Now what they're looking to do is move out of their rentals, Somerville, Cambridge, Boston, in closer into Boston in general, moving out to their first or second home. Now, if we look at the Arlington market, this plays out much clearer than it does here in Lexington. The Arlington market, first-time home buyers moving into a somewhat more affordable town. I say that the average price in Arlington this year has jumped to over $1 million. So not as affordable as it has been previously, but certainly more affordable than we see here in Lexington, Winchester, Belmont, for example. So we see the downsizers moving into the first-time home buyers moving into the town, and the downsizers moving out of a Winchester, Lexington, Belmont into an Arlington, this is why Arlington is a stronger market than we see here in Lexington. The average sale price to list price ratio in Arlington, 109%. High, much higher than we see in Lexington, which is itself much higher than we've seen historically. But this also plays out in Lexington, of course, because as the downsizers are able to move, as their house price becomes more higher, they're able to spend more on the home they move into, and therefore that kind of frees up some capacity in the market, puts homes on the market, which allows the second-time home buyers to move into the town. So this is historically, this has been the big driver in the market today. Now we're seeing layering on top of that, changing housing demands, pushing it even higher, pushing the buyer demand even higher, if you like. The other thing worth looking at is mortgage interest rates. And I do this because it's interesting to see how low they actually are. Blue here, this is from 2009 through to present day with a projection. So blue is the historical, green is the projection. And as you can see, the projection through Q3 in 2022 is still much, much lower than it's been historically. So mortgage interest rates, even with those high prices, you would think if mortgage rates will rise, a combination of high mortgage rates and high prices will put a damper on the market. Currently, the mortgage rate is really not being any kind of damper at all. Not really an enabler. I think perhaps I would look at it converse from that. They're actually, the low levels are not putting a dampener on the market today. So I thought it was interesting to kind of see where those mortgage interest rates are in comparison to what we've seen previously. So what about the predictions for 2021, now 2021, 2022? So I like to split it buyers versus sellers. We've seen substantially more sellers in the market this year and last year than we've seen since back in 2015. Given those high prices that we've seen, over 1.6 million for the average sale price here in Lexington, I think that will continue through 2022, certainly the initial part of 2022, as more sellers look to take advantage of those high prices, and sellers that weren't successful in buying in 2021 will still be looking in 2022. So we're going to see a high number, similar to what we've seen this year, number of sellers in the market in 2022 versus what we saw in 2021. So about the same. In terms of the buyers, there seems to be almost no end to the buyers in this market. We are still seeing, here we are late in the year, large number of buyers making offers on homes, 5, 10, 15 buyers making offers on homes that are well priced, well prepared, staged, well marketed, and so on. You got to get those right. Homes still sit on the market, there's no question. But if you get everything right, there is the possibility to have multiple offers on their homes. So if there's 10 offers on a home, 9 buyers are going to be unsuccessful. And we are still seeing that today. So the number of buyers in 2022 will be at similar levels to what we've seen in 2021. So certainly for the initial part of 2022, anticipate to see very similar conditions that we've seen here in 2021. That is, with a large number of sellers in the market and a large number of buyers in the market too. So carrying on the momentum that we've kind of got now through 2020 and specifically through 2021. So that's our predictions for 2022, certainly the first half of 2022. So thank you for that. We do this because we really do think that our clients deserve to be the smartest person at the closing table, because at the end of the day, if buyers and sellers become knowledgeable about home buying and what's happened in the market, everybody benefits, both buyers and sellers. So I want to thank you for listening to the Lexington Market Update. We'll be back again. I'll be back again. Perhaps Danny will be here this month, next month as well. We'll be back again next month, give you a sense of where we are, almost fully done with 2021. So with that, I'll say thanks for watching and see you next time. Bye.